Hello people, a very good morning to all of you. So guys, we're doing this chapter on accounting for bills of exchange. And till the previous class, guys, we have understood what is the meaning of bill of exchange and the promissory note. Also, we understood how do we calculate the due dates for bills of exchange and the promissory note. And we've seen accounting for not only 4 cases, we have seen for 8 cases. The first 4 cases were accounting for these things. And if the bill is dishonored, in the same scenario, what would happen? That also we have seen in the previous class. So now today we'll be heading towards the next concept, which is accounting for renewal of bill. Now, what do you mean by that? Sometimes the acceptor, the buyer, is unable to pay the amount and he himself moves that he should be given extension of time and in consideration agrees to bear the interest for the extended time period. What happens is that seller is issuing a bill of exchange to the buyer. Let me give an explanation here. Seller is issuing or drawing a bill of exchange on the buyer, and buyer accepts it and returns it back to the seller. So let's suppose the term period agreed is 3 months, right? Now what happens is just on the due date or before the due date, what happens is buyer realizes that he does not have money to pay. Obviously, when you're going to pay money, you know that, okay, I don't have sufficient money. So he voluntarily comes up to the seller and says that, seller, I have a small request. On the maturity date or on the due date, I'm not in position to make the payment. So kindly grant me another 1 more month of period of time. I will 100% ensure that I'll make the payment after 1 month. If seller feels that the buyer is genuine, he will accept it. So what will he do? He will cancel the original bill. Anyways, the original bill has to be cancelled on the due date because the bill is valid till the maturity date. So on that, the bill is cancelled, and in place of that, a new bill is being issued. Now, what happens is that the original agreed period is for 3 months. If the money is not coming to the original due date, if the money is coming to you for on the extended due date, now whatever the extra time, the buyer is taking, for that extra period, he has to compensate the seller by paying interest. Why? Because now seller would have planned all his business expenditure and all the purchases of items on the due date. So you would have been imagining that today is the due date. Today I'll get money from my customer. I'll take that money, go and purchase the items. I'll get those items and sell it, and I can make money. So on the due date, he's waiting for the money to come so that he can do the rotation of the goods with that business and make money. But unfortunately, the buyer is not in position to make the payment. Therefore, the seller is deprived of making a business. So to compensate him for his loss, we have to ask him to pay the interest. So here the buyer will agree to pay interest to the seller. Now you may ask a question, sir, on the due date, on the second due date, will the person 100% make the payment? No guarantee. No guarantee. If he makes the payment, well and good. If he does not make the payment, or if he says that no, I don't have money, I cannot pay you, then gone. It's a bad debt. So today we are going to understand this entire circumstances and do accounting entries based on this. Yes, boss. Yes. 100%. So whenever a bill is being drawn, whether it is first bill or the extended bill, always when you calculate the maturity days, you have to add on the grace days. Are you clear? Even if the new bill has been drawn, for that also you need to calculate 3 more extra grace days. Clear? Okay. Sometimes the acceptor is unable to pay the amount and he voluntarily moves to the seller and says that, please consider my situation and give me an extension of time. In such a case, a new bill will be drawn and the old bill will be cancelled. The new bill will be drawn and the old bill is cancelled. If this happens, the entries should be passed for the cancellation of old bill. This is done exactly as already explained for dishonor. On the due date, the entry we pass for dishonorment, right? The same entry we pass for the cancellation. When the new bill is received, the entries for the receipt of the bill is repeated. So when the new bill is issued, what we do for the writing of new bill, that we will record it. The amount of new bill may represent any of the following. Now this I will explain through a practical question. So let's take question from a special book, illustration 15. He says that A drew upon B a bill of rupees 60,000 at 2 months, and B returned the bill duly accepted on 1st Jan 2021. So A is the drawer of the bill, B is the drawee of the bill. A is the seller, B is the buyer. The bill amount is 60,000. The term of the bill is 2 months after date, and the acceptance is taken place on 1st Jan 2021. A discounted the bill with bank at 15% per annum. So what did A do? A got the bill discounted with the bank at 15% per annum. Before the bill was due for payment, B informed A that he will not be able to pay full amount and requested A to accept 20,000 immediately and draw upon him another bill for the balance amount for 2 months along with interest 18% per annum. Now you will not understand this point. I'll break up this point slowly. Now what happened is A has drawn the bill worth 60,000 on B. B has accepted and returned back. Then what did B do? Sorry, what did A do? A went to the bank and got the bill discounted, which means on the date of maturity, B is supposed to make the payment to the bank. But before the due date or before the maturity date, B is coming up to A and telling that, Mr. A, on the maturity date, I will not be in position to make the payment. Clear with this point? He says that I'll not be able to make the payment. So my request is, please cancel the old bill. And in place of that, please accept, I have 20,000 now. Keep that 20,000 money with you. Whatever the balance amount is there now, for the balance amount, please draw a new bill. So 60,000 is the original value. From that 20,000, he's paying immediately now. So balance is 40,000. That 40,000, he wants a 2-month further credit. For that, 18% per annum interest is being collected from B by A. This is the scenario. Any problem in this? Okay. The second bill was duly met. Second bill was duly met, which means second bill was honored on the maturity date. Give the journal entries in books of both A and B. So the first transaction is sale or purchase transaction, which is happening between A and B. The second transaction is B is accepting the bill of exchange. So this is also happening between A and B. Then seller is discounting the bill. The third transaction is seller is discounting the bill with banker. Fourth, on the due date, dishonorment of bill is happening. On the maturity date, the fourth step is the dishonorment of bill is happening. If the dishonorment has happened, the bank will take money from whom? On the maturity date, bank wants money, may come what? So he will take money from seller. He will take money from A. Then what is happening? With the fourth and fifth transaction, the original bill is cancelled. Then what is happening is buyer is giving 20,000 rupees in form of cash. For the balance amount, he is asking to draw a fresh bill. So seventh transaction is new bill. New bill along with interest. So I would say rather, after making 20,000 of payment, whatever is the balance amount, no, on the balance amount, first you're supposed to calculate the interest due. So seventh transaction will be the calculation of interest due. So in the sixth step, I'll get to know the balance value. In the seventh step, I'll know interest value. Both put together, I'll know the total amount to be recovered. That I will recover in form of bill of exchange. Ninth entry is what? On the due date, buyer is making the payment to the seller. So he's honoring the transactions. So are you clear with this step? Can you do the entries one by one? Entries is to be done in whose books? A and B both. Okay. So first in the books of A. Date, particulars, LF, debit rupees, credit rupees. Guys, if you look at the first line, it talks about A draws a bill on B. So there is no transaction about sale and purchase, but I'm doing it only for your knowledge. So first transaction is sale transaction. So it will be B account debit to sale. 60,000, 60,000. This is not required. This is only for your knowledge. This is not required. Now the transaction actually starts from here. The bill was accepted, guys. I told you, whenever you draw the entry for bill, or whenever you record the entry for bills of exchange, if it is a bill, then on the date of acceptance, you will record it. If it is promissory note, then on the date of issue, will record it. So on 1 Jan 2021, 1/1/21, I need to close B's account. So B will be credited to B account. What will I debit? Bills receivable account debit. Are you allowed to write B/R in the exam? You write full form. So 60,000 asset I'm recording and 60,000 worth asset I'm closing. So I've recorded the first transaction. First transaction done, second done. First two entries I've recorded. Now third entry is for discounting, guys. So when I discount, the money goes out of my hand. On which date the discounting is happening? If the date is not mentioned, can I say on the same date they'll discount? So that is on 1/1/21. From my hand, the asset is going out. So credit what goes out. So two bills receivable. Asset is going out. Asset worth 60,000 is going out. So I'll put in the credit column. When I send the asset out, in return, what am I getting? Money in my bank account. So bank account debit. Money is coming into my bank account. How much money is coming into your bank account? So I need to calculate interest. 60,000 into bank is charging 15% per annum. This money we are going to enjoy for how many months? So for that, you need to calculate the maturity date. So please tell me, what is the maturity date, guys? Working note number 1. Calculation of maturity date. Date of issue plus how many months? 2 months. Plus 2 months plus 2 grace days. Online people, I want you to respond, please. Date of issue is 1/1/21. So what will be the 1/1? 1 January, February, March. So 1 March plus 3 grace days is 4/21. Now on 4 March 21, on the maturity date, bank will receive the money. And when is bank paying the money? Bank is paying the money on 1 January. So effectively for 2 months, bank is giving you the money and you're enjoying the money for 2 months. So for that period, you need to give interest. So into 2/12. So please tell me the interest. How do you calculate? Calculator, all of you?
1,500.
Guys, forget 12th now. Gone are those days. If you've grown up, you have to use calculator, boss.
1,500, sir.
1,500. 60,000 minus 1,500. 58,500. So you'll get 58,500 in your bank account. So what happened to remaining 1,500? It is your expenses. It is your decision. So it is your expenses. So discounting charges account debit 1,500. Clear? Any problem here, please? Online people, comfortable, not comfortable? Now I'll teach you the technique how to do. In your calculator, please type 60,000. 60,000. On the right bottom corner, you will find M plus. M plus stands for memory plus. So in the memory, 60,000 is added. Then come back and type 60,000 into 5% into 2 divided by 12. Then don't put as equal to. Directly press M minus. Because from that 60,000, what is M plus earlier? From that you will M minus. You'll get 500. I put 5%, is it? Sorry. 15% is no? Okay. So 60,000 M plus 60,000 into 15% into 2 divided by 12. M minus MRC. 58,500 directly you will get. Let's do it one more time. Now what did I do is 60,000 के बाद put m plus 60,000 m plus, then straight away press 60,000 into 5% into 2 by 12 m minus, then MRC. So what happens is 60,000 is gone and added in the memory of the calculator. Then immediately you have to calculate this interest. This interest, that is 60,000 into 5% into 2 by 12. The moment you do that, you will get that interest. That interest you put m minus, which means what? With 60,000 m plus, this 1,500 will automatically get subtracted. And once you press MRC, MRC means it will automatically do the plus and minus for you. So everything is happening not in your brain, it is happening in calculator's brain. This is the replacement of your brain. Now, the more and more you start using this, your brain will get handicapped like me. So without this, you cannot survive in future. But again, we have no other option because in exam, you have to do the calculations faster. You cannot spend time on doing the calculation. So you have to follow these tricks. Online people, do you get what I do? Now guys, all those people, those have this calculator, you will have no problem. This one or black one. So some people have this Casio calculator or some other calculator where in that, what is the problem is, whatever you record in memory now, that does not get automatically erased. It goes and stays in memory. You have to manually erase it. Just in case if you forget to erase the things from memory, when you do the next calculation, everything will get further added and subtracted. So that is why I told you go for CT 512 or 512, any 512 calculator, you'll be comfortable. No, in your calculator, there's a memory problem. That's why I said you. Arjun and Siddhi, your calculator is useless. He's got proper one. She's got proper one. Online people, she gone. Put down. Is that local calculator or original calculator? So this, I'm telling you, this dummy calculator is coming for 100 rupees. No, put one time down, gone. Online people, are you getting the answer how to calculate?
Yes, sir.
Which calculator? Okay, who's not got the answer?
Sir, yes.
Yes, which calculator are you using?
FC12 sir. FC512.
FC512. Show me in the video.
Flare का है sir.
Sorry?
Flare sir.
I don't know. Show me the calculator. No.
1 minute. Sir.
कपड़े पहन के तो बैठा है. हाँ. This is fine only.
Answer नहीं आ रहा sir.
Okay, once again, do the steps what I say.
हाँ sir,
60,000.
60,000.
And press M plus.
Yes sir.
Immediately, don't do anything else. Don't press anything else. Next is this 60,000 into 5% into 2 by 12.
60,000.
Don't do 5 by 100. Directly 5% is there. 5%
Okay,
is there. 60,000 into 5% into 2 by 12. Immediately press M minus.
By 12. Yes sir. Answer
M minus.
500 आया sir.
500, not 5%. Sorry, yes. 15%. Sorry. 15%.
Sir.
Sorry.
Then it will come.
That's coming? Yeah, wonderful. Other online students, you've got the answer?
Yes, sir.
Okay. Now let's go forward, guys. Now what is happening next? The bill is being discounted, guys. The bill is being discounted on the maturity date. Bank is supposed to receive the money, but buyer says that I don't have the money to pay. So will bank say, okay, no problem? Bank will say that I don't know that and all. That and all I don't know. I want my money on the maturity date. So on the maturity date, what is the maturity date? 4/3/21. Bank will take money from our account. If B doesn't pay, he'll take money from our account. So from our account, guys, from A's account to bank, money is going out. How much money will the bank take from your account? Full 60,000, because he has given you 58,500. He will get from you 60,000. So he wants to pocket 1,500 rupees as profit. So he will take full 60,000. Now, guys, what is happening here? 60,000 is gone. Now, did bank do any notary charges? Did he pay any notary charges? No. Why? Because B here had informed A in advance. A would have informed the banker in advance that this is the reason Why the opposite person is not paying the money. So you don't worry, I will pay that money to you. In that case, there is no need for noting, no? Because the person is genuinely in advance, he's come and informed you. So there is no noting charges. So now very simple, guys. 60,000 money is gone from the bank account. From whose bank account? Our bank account. Did we receive the money yet from B? No. So you have to receive the money from B. Now on the maturity date, boss, B is recreated. And then later, all the new bill will come into picture. So what we'll do, we'll debit B's account. So B's account debit 60,000. So if you observe carefully, what had happened is that B was created here. B was created here and it was closed here. Bills of receivable was created here and it was closed here. Now there is no B in the account. B's account balance is 0. Bills receivable account balance is 0. Now it is important for me to recreate B. So this is basically the recreation of B's account. This is basically the recreation of B's account, which means that B has to pay 60,000. Out of the 60,000, can I say is paid 20,000 to us? So on 4/3/21, 20,000 is paid. 20,000 is paid. So cash or bank, any one you can write in exam. Cash or bank account debit. I would prefer bank only. 2. To the extent of money what is given, I will close B's account now. Guys, who's given this money? B is given. So out of 60 is given 20. So to the extent of 20,000 rupees, should I not reduce his balance due? So to B's account, 20,000, 20,000. Understand this point very clearly. Initially what happened, guys, here, when you debited B, 60,000 was debited in his account plus. Then later when bill of exchange was issued, you credited B for 60,000. Means what? You subtracted B's account. So B's balance became 0 when the bill of exchange, when the first bill of exchange was issued. Then later now, when on due date bill is dishonored, you are again recreating B 60,000. You again debited B, correct? When I did B's account debit 60,000, you recreated B. Out of the 60,000 rupees, guys, B is paying 20,000 rupees. So I'll credit his account. What is the balance? 40,000 debit balance. 40,000 debit balance. Till this, anybody's got any problem in understanding? Now, B's account has got a debit balance of 40,000 rupees, which means B is still to pay us 40,000 rupees. We have to receive from B still 40,000 rupees. Any problem till this? Any problem till this? Online people, I'm asking all of you.
No, sir.
No,
Others?
sir.
Okay. Now, guys, B informed A that he'll not be able to pay the full amount and requested A to accept 20,000 immediately. So for this, we have received the money. We have passed the entry and now draw upon him another bill for the balance amount. What is the balance amount? 40,000 for 2 months along, means with plus interest. So now first you have to calculate interest and record interest. For A, guys, interest is income or expense? For A, interest is income or expense? I'm waiting for online students to respond.
Income.
Others? Hello? Abhi, Kavi, Kavya, Sanjay? For A, we are recording the entry in books of A. For A, interest is what? Who's going to pay interest to whom? Buyer is going to pay interest to seller. So for B, interest is expense. For seller A, interest is income. So income is nominal account. Interest income is nominal account. So debit all expense and losses, credit all income and gain. So in the A's book, interest will be credited. So on 4/3/21, to interest income. To interest income, how much? 40,000 is the balance amount into 18% interest is willing to pay per annum. So 18 by 100 into 2 by 12, because we are going to give him further credit of 2 months. So take your calculator. 40,000 into 18% into 2 divided by 12. So 1,200. 1,200. 40,000 into 8%. You don't have to do 8 by 100. You can do directly 18%. In calculator, 18% provision is there. 40,000 into 18% into 2 by 12, 1,200. So 1,200 I've credited. What will I debit? What will I debit? Can I say this money is supposed to come from B? So I'll debit B. So B's account debit. Now guys, before you draw a new bill, you should identify what is the total amount that I should receive from B. That is what we are trying to calculate. So now guys, you have debited B again with 1,200. So go back here, add 1,200 debit. So now totally how much money should I recover from him? 40,000 for the original bill value and 1,000 towards interest. So 41,200 totally I need to recover. So for this value, you will draw a new bill. Now you will draw a new bill. So on 4/3/21, I will reverse B. So when you draw a bill, what happens? Bills receivable account is debited, and in place of that, whatever amount you accounted in B's account, that you need to cancel. So B's account will be cancelled. How much? 41,200, and debit will be 41,200. The moment you put 41,200 in credit, guys, the balance in the B's account will become 0. The moment you credit 41,200 in B's, it becomes 0, because that 41,200 is transferred to bills receivable account. Now from this, guys, calculate the new maturity date. With this, add 2 months plus 3 grace days. So 4th March, 4th April, 4th May, then 5, 6, 7, 7th May. So 7/5/2021. On the new maturity date, the question says that the second bill was duly met, which means it is honored, which means you are receiving the money. So bank account debit, money is coming to your bank account, 41,200. To what? 2 bills receivable. I need to cancel the bill. On the maturity date, the second bill loses its validity, so we have to close the bill. That's all, guys. That's all. Now here, all the people, those are strong with the concept of journal, ledger, and those who are very strong with the bills of exchange base, you will find this easy. Tell me, guys, any problem here? Any problem here?
No, sir.
Sanjay, Abhi, Kavi, Kavya, Yash, comfortable?
Sir.
Yes, sir.
So mark
Yes,
this
sir.
question important. You have to do this question at least 2 times to get the hold on this particular concept. So these are all basic questions, guys. From the ICA material, when we start working on, all will be complicated. So be prepared for this. Be prepared for this. If you have any doubts at any journal entry, please ask me. I'm ready to explain. When you record a journal entry, guys, in your mind, you should know that if I pass this thing in debit, what is the impact? If I pass an entry in credit, what is the impact? You should have a vision. You should have a forward vision. You should have a long vision. You should be able to imagine the impact. Only then you'll be in position to do the answers correctly. That will take time. That will take time. If you're clear with this, I'll go forward. If you're clear with this, I'll go forward. So the second question of your study material, this is a question based on renewal of bill. Yes, boss. Illustration 14. Okay. This I'll take it at the end. Okay. This query I'll take it at the end. Okay, guys, all of you, your second question of your ICI study material. It says that Vijay sold goods to Preetham on 1st September 2019 for 1,06,000 rupees. They're given the information about sales. So can I say that they're expecting the sale and purchase entry? Yes. Oh, 1 second. We did the previous question from A's point of view. We did not do from B's point of view. No? Sorry, guys. Let's complete that from B's point of view also. I forgot. And you also not. You also forgot. Wonderful. Okay, guys. Let's do the question from B's point of view. Before we go to the next question, this question we have to do from whose point of view? B's point of view. That is pending, no? So in the books of B. In the books of B. The first entry is purchase entry. So purchase account debit to A. 60,000, 60,000. This is on date of sale. This is on date of sale. So first transaction, purchase transaction recorded. Second transaction is for bill. So that is on 1/1/21. You cancel the creditor by giving a debit. So A's account debit to bills payable 60,000, 60,000. The third transaction happening between A and bank. Will B record this in his books of accounts? Tell me, people. Will the discounting entry be recorded by B in his books of accounts?
Yes.
Online people, I'm waiting for responses.
No, sir.
No. Now, on the maturity date, the bill is being dishonored, which means what is happening? On the maturity date, that is on 4/4/21 or 4/3/21. 4/3/21, no?
Sir.
On 4th March 21, the bill is dishonored. We need to cancel the bill because on the maturity date, B is told that please cancel my old bill. So what is the cancellation entry? What is the dishonorment entry? Cancellation means dishonorment. In that case, I need to cancel bills payable, and in place of that, I need to recreate A's account because A's account is being closed. How? Earlier you credited A, you credited A and you debited A. So A's account got cancelled. Now you have to recreate. Why? Because B's validity is over. So I need to cancel B by giving a debit. So bills payable, account debit. I'll cancel the bill worth 60,000 and I'll recreate A's account 60,000. Correct? Then what is happening, guys? After dishonorment, fifth transaction, bank is recovering money from A. Recovery of the money by the bank from A will be recorded in his books? No. So next is sixth transaction. Sixth event is what? B is making the payment of 20,000. So on 4th March 21, B is making the payment to A. So money is going out. So to cash or bank. Money is going out of B's hand. To cash or bank 20,000. To that extent, can I say the creditor needs to be reduced? So A's account debit 20,000. I will reduce the amount to that account. So which means that we have to pay A 60,000. From which 20,000 is already been paid by debiting it. So balance is 40,000. Credit balance positive. Now what is happening? We have to calculate the interest due entry. So that the balance bill amount plus the interest, both the values put together, I can create a new bill. So for that, first I need to know the interest due. So from B's point of view, interest is expenses. So debit all expense and losses. So interest expense account debit. How much it was? 1,200. And this money, first, this is a due entry. Due entry means what? We have to create a liability. Liability in favor of A. So I'll credit A. So to A's account, 1,200 credit. So when you credit 1,200 in A's account, now the total becomes 41,200 credit balance. So after this entry, A's the total amount that you're supposed to pay to A is 41,200. Now guys, you can cancel A's account and in place of that execute a new bill. On 4/3/21, you will cancel A account. So A's account debit. So how much money is there totally in A's account? 41,200. That you will cancel by giving a debit. So the moment I give a debit 41,200, the symbol will become minus and the balance will become 0, which means you have transferred the money from A's accounts to bills payable account 41,200. On the maturity date, the question is very clear. 7/5/21. Correct? Bill is being honored. Bill is duly met, which means honored, which means what? I'm closing the bill 41,200 by giving a debit, and I paid the money in form of cash in bank. Game over. Game over. Any difficulties, please? Any difficulties, please? Offline people comfortable? Online people?
Yes, sir.
No problem?
No problem.
Wonderful. Super. Guys, trust me, you will require a lot of practice, guys. The more and more practice you do, you will get the hands. Don't worry. That's why I tell that the revision pattern, what I'm going to suggest you, or what I've already suggested, if you strictly follow, you'll find it very easy. Everything will take some time, guys. You have to believe in yourself. Now, guys, come to the second question of the study material. It says that Vijay sold goods to Preetham on 1st September 2019 for 1,06,000 rupees. Preetham immediately accepted a 3-month bill. So the term of the bill is 3 months after date. On due date, Preetham requested, on the due date, Preetham requested the bill to be renewed for a fresh period of 2 months. So the new bill is now having a term for 2 months. Vijay agrees, but he says that I will charge interest of 9% per annum. And that interest was paid immediately in cash. In the previous question, what happened is interest was calculated and it was added along with the balance. And for the entire balance, we calculated a new bill. But here, the interest is paid in cash. Clear with this point? So you'll pass an interest due entry and immediately the interest payment entry. To this, Preetham was agreeable. The second bill was met on the due date. Now pass entry in Vijay and Preetham's books of accounts. Interest due entry, whenever the interest is paid, you can pass directly payment entry. But why I'm asking to create the due entries, because if you have a habit of following uniform thing, it will be easy for you. If I tell that in this question you pass a due entry, in this question you pass a direct payment entry, you will get confused. So always I tell, always pass a due entry followed by the payment or receipt entry. So that will be uniformly followed. You will not have any confusions or problem later. Now, guys, in the books of Vijay sold goods. So Vijay is the seller and Preetham is the buyer. So in books of Vijay, date, particulars, LF, debit, credit. Rupees is important. No rupees, no marks. So the first transaction is sale transaction, which is taking place on 1 September 2019. So 1/9/2019, it is Preetham. So Preetham account debit. Preetham account debit to sales account 1,06,000 rupees. 1,06,000 rupees. Being goods sold to Preetham on credit. Being goods sold to Preetham on credit. Then on the same day, the bill has been accepted. Preetham immediately accepted. Immediately means on the same day it was accepted, and the term period is 3 months. So I'll reverse Preetham and debit bills receivable account. So bills receivable account debit, I'll create a new asset and reverse the old asset, which is Preetham. Same value, 1,06,000, 1,06,000. Now, guys, first entry is the sale or buy entry, sale or purchase entry. Second is the bills of exchange entry. Now there is no third party, no creditor, no bank. On the due date, B, that is Preetham has requested to cancel the old bill and in place of that create a new bill. So now guys, on the due date, what is the due date? 1 September plus 3 months plus 3 grace days, which is October, November, December. So 4 December plus 3 days is 7 December. So 7/12/2019. What happens, guys? This bill needs to be cancelled. So I need to give a, oh sorry, 4, no? Sorry, 4. 1 plus 3 is 4. Yeah. So on 4 December 2019, this bill needs to be cancelled. So 2 bills receivable. 1,06,000 rupees. And debit will be what? I need to recreate Preetham. So Preetham account debit 1,06,000. Clear? On the due date, Preetham requested the bill be renewed. Means bill to be cancelled. So cancellation entry passed. And a new bill for a period of 2 months to be created at an interest of 9% per annum, which is immediately agreed to pay in cash. So next step is interest entry. On 4/12/2019, I need to pass first the interest due entry. What is the interest due entry? For this fellow, what is his name? Vijay. For Vijay, guys, please tell me, interest is income or expense?
Income.
Income.
To interest income. Correct? Calculate the interest, please. 1,06,000 into 9/100, or you can say 9%. 9% into 2/12. 1,590. Is it correct? 1,590. So this money is yet to be received from Preetham. So I'll debit Preetham. Always pass a due entry. Always pass a due entry. 1,590. So now from Preetham, you have to receive 1,06,000 plus 1,590. But on the same day, that is on 4 December 2019, we are receiving the money in cash from Preetham. So cash or bank account debit to Preetham. 1,590. So this is basically the due entry. And this is basically the receipt entry. Now you may have a question. Sir, can we combine both the entries? You can combine. But provided if you promise that you don't forget the due entry, then I will allow you to write the combined entry. But if you feel that no, sir, I'll forget to write the interest due entry, because in the previous question, interest was not received on spot. So there was an interest due entry created. So if you promise that you will not forget the due entry, then you can combine and write it. If not, you have to segregate and write. Let's see what have they done in your textbook. See, they have given a separate due entry. So we'll also follow a separate due entry. Now guys, if you see, total money that I'm supposed to collect from Preetham is 1,06,000 plus 1,590. In that 1,590 is received. What happened to balance 1,06,000 rupees? It has been converted to a new bill. So I'll cancel Preetham for 1,06,000 rupees. And in place of that new bill, second bill, I will debit it. 1,06,000 rupees. Now you may ask a question, sir, can we combine the previous entry, cash and bank and bills receivable entry together? You can do it. This you can do it, not a problem. In the question, if you see here, total money that you're supposed to recover from Preetham is 1,06,000, the original bill value, plus the interest 1,590. Both put together is 1,07,590. So if you see the next entry in the textbook, what they've done is, total Preetham's account is reversed. So 1,07,590 we are reversing. In return, what am I getting? I'm getting bill worth 1,06,000 and I'm getting cash worth 1,590. So the two entries, what I've done separately, these two entries even you can combine. Nothing wrong. Till this, anybody's got any problem?
No, sir.
Till this, anybody's got any problem? Next, the new bill is valid for how many months? 2 months. So from 4/12/19, calculate 2 months plus 3 grace days. So it is 7/2/2020. What happens on the maturity date? I'm getting the money. The question is very clearly told that the bill has been honored. The bill is met. Therefore, cash or bank account debit. 2. Bills receivable. I need to cancel the bill to the extent of 1,06,000 rupees. To the extent of 1,06,000 rupees. Clear? Online students comfortable?
Yes, sir.
Yes, sir.
Comfortable, sir.
I'll give you 3 minutes of time. I want you to do the entries in books of Preetham. Only 3 minutes. Please do the entries in books of Preetham. If you're getting confused, draw the diagram so that you get to know what transaction is happening between whom, in which date it is happening. So that diagram is going to be very useful. You may ask a doubt that, sir, do we need to do the diagram in exam? Not required. You practice so much before the exams that when you go to exam, things will automatically come in your mind. And if at all, if you feel confused, you can do the diagram in the rough calculations. How many of you have started doing the entries in Preetham books of account? Okay, Siddhi started. Completed?
Here
Okay.
also, sir.
Online people who started?
Yes.
Yes. Okay, wonderful. Abhi, Kavi, Kavya, Sanjay, what happened? Started?
Started, sir.
Okay. So this is done. Good. Done. Good. Done. Super. Online people done?
2 minutes.
2 minutes.
1 minute.
1 minute.
Completed, sir.
Complete. இம்மா நேரம் என்ன பண்றீங்க நீ?
Solving.
So guys, in books of Preetham, the first entry is the purchase entry. So purchase account debit to Vijay for 1,06,000 rupees. Then on the same day, the bill has been accepted. So I'll reverse the liability by giving a debit. And in place of that, a secured liability is being created for 1,06,000 rupees. On the maturity date, Vijay is saying that I cannot make the payment. Right? He's requesting to renew the bill. Renew is equal to dishonorment. So dishonorment, what will be the entry? This secured creditor, I need to cancel by giving a debit. So bills payable account is debited, and I will recreate the unsecured liability with the same value. Then what will you do? We'll pass the interest due entry here also. So what is the interest due? From this fellow's point of view, Preetham's point of view, from Preetham's point of view, it is interest expense. So debit all expense and losses. So interest account debit 1590, and we create a liability in favor of Vijay. So to Vijay 1590. So now how much money we are supposed to pay to Vijay? 1,06,000 plus 1590. Total 1,07,590. Out of which 1,590 is received in, sorry, it's paid in cash. So I'll reverse Vijay's liability 1,07,590. Against this, I'm paying money 1590, and I'm creating a new secured liability for the second bill for the balance 1,06,000 rupees. Clear? And then what am I doing? On the maturity date, I'm reversing the secured bill. Why? Because I'm making the payment. Sorry, I'm making the payment 1,06,000. That's all. Anything difficult here? Online people? Kavi, Abhi, Kavya, are you able to follow more?
Yes, sir.
Abhi,
Sir.
Kavya? Abhi? Abhi, you're there? Okay. Now, guys, we are heading towards the next concept, which is retirement of bill. Retiring of a bill under rebate. Now, what is the meaning of the retirement of bills of exchange under rebate? We have seen that renewal of bill of exchange, renewal of a bill of exchange is made when a person does not have a sufficient money to pay for the bill of exchange on the due date. In retirement of bill, what did we learn? On the due date, on the maturity date, the buyer does not have money. Therefore, he requests to create a new bill and cancel the old bill. Therefore, he requires a further credit period. Many a time, instances do arise when the acceptor has spare funds much before the maturity date of the bill of exchange accepted by him. Now, what happens is, I have purchased the goods today. I tell the seller that, seller, I am running short of money. So I'll make you the payment after 3 months. Why? Because I'm expecting a payment to come after 3 months. So therefore, I would ask you a further period of 3 months. I mean, a total period of 3 months. But the opposite party from whom I'm supposed to get money after 3 months, he is giving me the money in 2 months. So now I have the money in 2 months. Correct. So I'm having the spare funds. I'm having the funds and I want to make the payment in advance. This is the concept of retirement of bill. Retirement of a bill is you're honoring the bill. Retirement of a bill means you're honoring the bill before the due date. You are settling the bill before the maturity date. That is called as retirement of bill. Many a time, circumstances do arise when the acceptor, that is the customer, has funds much before the maturity of the bill of exchange. In such circumstances, he, that is customer, approaches the payee of the bill of exchange, that is the seller, and asks him whether he can make the payment before the maturity date. Why would seller say no? If somebody is telling that I want to give you the money, obviously the seller is come give me the money. But here there is a condition. Now, the person who is offering the early payment, he says that, look at this. This is month 1, this is second month, this is third month. The sale is taken place here. This is the date of sale. This is the due date. So the seller has agreed to receive the payment after 3 months. Now the buyer has the payment here ready. The customer says that I have the payment here ready. Now customer goes to the seller and says that I have the payment here. Do you want it? Which seller will say no? Obviously, everybody will say, give me the money. But buyer puts a condition here that seller, listen to me very carefully. As per the contract, as per the bills of exchange contract, you have asked me to give the payment here. But I have the money ready here. So I'm making you 1 month early payment. Now, if I don't give you the payment here, If I give you the payment here, I have extra 1 month where I can invest this money somewhere else in my business or somewhere else, and I can make some additional income because you have given me an advantage that I will give the payment after the 3rd month. But fortunately, I have the 1 month money in advance. So if I keep this money with me and if I don't inform you, I would have invested this money elsewhere and earned some interest. But now I'm informing you this. I am deprived of this opportunity. I'm not having this opportunity to invest elsewhere. In that case, if you are ready to compensate, this interest to me, then I'll make the payment. Then now seller thinks that, see, total 1 lakh rupees I have to receive from this fellow. If I get the money, now seller is thinking, if seller is getting this money here, this 1 lakh rupees he will reinvest in his product and sell it. In this 1 month, he can reinvest this money in his business, he can sell it. And let's suppose he's earning 12%. For that period, he's earning 12%. And how much is this fellow demanding the interest? He's telling me, give me 7%. The customer is telling me, I have an opportunity to earn 7% interest. If you give me the 7%, I'll give you the money. Or else I will invest this money somewhere else and I'll give you only on the maturity date. Now the seller is calculating in his mind, if I get this money today in the 2nd month, I can earn 12% interest. And I'm supposed to pay how much? 7% interest. So net how much profit percentage I'm making? 5%. The seller will think, is this a good deal or not? Seller says, this is a very good deal. I have the opportunity to earn 5% extra if I get the money 1 month in advance. In that case, seller will be willing to pay the 7% because he knows with that money he can get 12% return. This process is called as retiring of a bill under rebate. This 7% what you're paying, no? The 7% is a discount that you're giving. This is an interest that you are foregoing. This is the rebate that you're giving. So what is the rebate here? The 7% amount what you're discounting and giving, no? This is called as a rebate. With the practical question, you will understand it much better. In such a case, the acceptor means what? Customer gets a certain rebate, which is 7%. That is called as interest or discount also for premature payment. The payment is getting matured here. If the payment is made here, then it is called as a premature payment. All of you know premature baby. If the baby is born after 9 months, this is called as a proper born baby. Sometimes the delivery happens before the 9th month, sometimes in 8th month, sometimes in 7th month. We call them as a premature baby. Same way here also. If the payment is happening on the due date, it is a matured payment. If the payment is happening early, that is called as a premature payment. So for premature payment, the customer will get a rebate, will get an interest, will get a discount. That is called as a rebate. The rebate becomes income for the acceptor. So for the customer, it is rebate income. For the seller, it is rebate expenses. Okay.
Sir, doubt sir.
Yes, boss.
Sir, अगर बीच में कोई third party
English,
जैसे bank,
English.
sir, if suppose in between third party like bank comes, then the buyer will not say to the bank, "No, sir, that I have the money ready. You can take now."
You can tell. So for example, this is a question where you're telling that if this bill is being discounted by the bank, in that case also, the banker will come and, the customer will come and tell this to the, which person?
Bank.
The customer will come and inform the seller. So seller will follow this procedure only, boss, because banker will get the money on the due date only. So that banking transaction will not affect. Here, what will affect is, okay, you mean to say that the payment will go to whom?
Yes, sir.
The payment will come to us only. Why? Because we will get the money. We will invest this 12% to earn this 12%. We'll invest this money to earn 12%. Yes. On the maturity date, what will happen? The banker will take money from us. Because customer has paid the money to us. So on the maturity date, banker will feel that the bill is dishonored. He'll get the money from us.
Okay.
You able to follow?
Yes.
Those kind of questions are there. Complicated. Everything is there. Don't worry. So let's do one question based on this. Illustration 19, guys. It says that on 1st Jan 2021, A sold goods to B for 10,000. A sold goods to B for 10,000. A sold goods to B for 10,000. and drew upon him a bill at 3 months for the amount. So in return, what is happening? This is first, this is second. Bill of exchange for 3 months. B accepted the bill and returned to A. On 4th March, that is a middle date, B retired the bill under rebate for 6% per annum. Now guys, quickly calculate and tell me what is the due date? This is the time period. You can say date of sale or date of issue of bill. 1/1/21. 1 January 21. The bill has been issued and accepted. Issued or accepted. Now guys, from that please calculate the maturity date. Plus 3 months plus 3 grace days. So February, March, April.
April 4th.
April 4.
4th April. Yes, 4/4/2021 is the maturity date. But the payment is happening on 4th of March. 4th of March is here. So on 4/3/21, customer is having the amount ready. He is willing to make the payment. He is willing to make the premature payment. He is willing to make the premature payment. For this, he is telling that I will charge 6% per annum, which means that for this period, he is earning an interest of 6% per annum, which means that if B is not making the payment here, if B is not making the premature payment, if B is not making the payment to A, B is saying that I will invest this money somewhere else. I will invest this money somewhere else and I'll earn interest of 6% per annum, which means 0.5% per month. 6% is for 12 months. So for 1 month, it is 0.5% per month. I will earn this 0.5%. So if you are able to give me this 0.5 per month, I will give the money to you. Why will I invest elsewhere? If you are ready to give me the same value, why should I give this money to somebody else? I'll give it to you itself, boss. Now this fellow calculates. If I get this 10,000 rupees today, and if I invest in my business, I can make a profit of 1.5% per month. See, the 6% is for 12 months. Here, the benefit is only for 1 month, boss. So for 1 month, how much? 0.5. So now, A is the seller. Seller is calculating. If I'm getting the payment here, just suppose I get the premature payment here. I'll invest this money in my business in this 1 month. In this 1 month, I'll invest the money. And I can make 1.5% per month. This is going to be my income. 1.5% will be my income. What is the expenditure for this? 0.5% per month is the rebate that I have to give in form of expenditure. What is the net profit that I'm going to make? 1% per month. Benefit for is it benefit for the seller? So seller says that no problem. Come, give me the payment. You take 0.5%. You enjoy. I am smart. I'll enjoy 1%. So now we have to do the entries for this. First entry, guys. First entry. In this books of A, first entry on Jan 21, we have to record the sale entry. Debtor to sales, 10,000, 10,000. Please note it down. Debtor to sales, 10,000, 10,000. The first entry is for sale. The first entry is for sale. The second entry is for cancelling the debtor and creating a bills receivable. So I'll cancel the debtor by giving a credit, and in place of that, I'm creating a new asset, bills receivable, 10,000, 10,000. Then what is happening, guys? Then will you pass the next entry on the due date? No, we are not going to the due date at all. We are here. We've passed 2 entries here. If we come in this order, on 4/3/21, my transaction is over. So the next event, the next stop is 4/3/21. On 4/3/21, what is happening? We are receiving the money against the bill. So bill needs to be closed. Bill worth 10,000 needs to be closed. And we're receiving the money. So cash or bank account will be debited. But how much money you're going to receive? 10,000 into 6% into 1/12. This is the interest value. You can say interest allowed discount allowed or rebate allowed, anything. This is rebate allowed. This is rebate allowed. It is expenses for us. Debit all expense and losses. It is rebate allowed account. Interest allowed account. The more apt word is rebate and discount. More than interest, I would say the correct word is rebate and discount. This is as good as giving a discount. If you remember in 11th standard, we studied the concept of cash discount. Cash discount allowed was debited. Same thing here. So this is rebate allowed or discount allowed for making early payment. In simple words, guys, this is nothing but cash discount only. No? For giving the early payment, is charging interest from us. So this is discount allowed or rebate allowed. This is the right word. So from 10,000 rupees, if I allow a discount of 50 rupees, I'm getting 9,950. That's why I told that if you do this bills of exchange, prior to it, if you're clear with the topic of rules of debit credit, journal and bills of exchange, you will find this entire chapter so easy. If this question comes in exam for 5 to 10 marks, just like that, you can take it. Online people, are you comfortable?
Yes, sir.
Yes, sir.
Kavi, Kavya?
Yes, sir.
Wonderful. Now we have record this in B's book. So B, what is he doing? The first transaction is purchase transaction. So purchase account debit to creditor, purchase to creditor on 1st Jan. On the same day, the creditor is reversed and in place of him, the secured bill is being created. So we reverse the creditor by giving a debit and we create a new liability in form of bills payable. Finish till this. Done. Next. On the premature payment date, that is March 4th, what is happening? B is making the payment. So from his hand, money is going out against the bill. So I need to close the bill. The bill value is worth 10,000. So which is currently in credit. To cancel a credit, I need to give a debit of 10,000. So how much money are you paying? From 10,000 rupees, you got a rebate. You received a discount of 50 rupees. So you'll pay only 9,950. So this is rebate received, discount received. It is a gain for us. So credit all income and gain. It is a gain for us. So to rebate received, 50 rupees. Acceptance retired under rebate or bill retired under rebate. Both you can write. Acceptance is also right word, or you can write bill retired under rebate. Both are correct. If this is clear, guys, I'll go to the next question of your study material. I'll go to the next question of your study material. After this, I'll give you a break of 5 minutes. Can we do the next question, guys? What's it?
Yes, sir.
Abhi,
Yes,
Kavi,
sir.
Kavya, Yash.
Yes, sir.
One person is missing from online. Who is that? No, Srikanth was absent, he said today. So one person logged in now is not here. Okay, anyways. Third question of your ICA study material. On 1st Jan 2020, Ankit sells goods for 5 lakh to Bhavika and draws a bill at 3 months for the amount. Bhavika accepts it and returns it to Ankita. On 1st March 2020, Bhavika retires her acceptance under rebate of 12% per annum. Record these transactions in the books of Ankita and Bhavika. Is it different from what we did previously? No. So I'll give you 2 minutes of time. Please do it and let me know if you have any doubts. Sanjay, yes, you're doing it.
Yes, sir.
Yes, sir.
Ravi, Kavya, Abhi, you doing it?
Yes, sir.
Okay. Done, guys? Done? Ankita, done? You're doing in Bhavika's book? Okay. Guys, you need to pick up the speed because you will get quite lengthy questions in your exams. So if you have the writing speed fastly and neatly, you'll find it easy right from now. No, it has to be calculated in months. Rebate has to be calculated in months because months is given. Now, if days is given, they will calculate in days. No, not required. Month, if you take, automatically grace days is taken into consideration. If they ask you to calculate in days, then for grace days also you need to take into consideration. Here, whenever month is given, guys, very simply on monthly basis you calculate. Forget grace days. If it is asked to calculate in days, for example, they'll tell you that the bill is drawn for 90 days. Then obviously you have to take into consideration the grace days and then calculate.
Completed, sir.
So, come again? No, that's what I'm telling you. When you come in, when month is given, when you're calculating month, no, the 30 day, 31 days all ignored. That is all slipped away. Month means month to month you calculate. Only if it is days, then accurately for each and every day you have to sit and break the head. Getting my point? So Ankita, done with Bhavika's book? Who is doing Bhavika's book? Samiksha Siddhi. Okay. Online people?
Completed, sir.
Finish, sir.
Okay.
Completed.
So 1/1/2020, the date of issue of the bill is happening. And the maturity date falls on 4/4/20. And the payment is happening on
First March.
1/3. So effectively 1 month. So the confusion here is, sir, here it is 1 March and the payment is happening on 4 April. So 1 month plus 3 days is there. No. Should we calculate the interest and rebate for that extra 3 days? No. Since it is monthly calculation, we'll ignore this 3 months, or we'll assume that whatever the monthly calculation we're doing, no, that itself includes that grace days. So now guys, the sale entries, debtor account debit to sale. So we're recording the books in Ankita's account. So Bhavika's account debit to sales, 5 lakh, 5 lakh. On the same date, the bill has been executed. So we'll reverse the unsecured debtor and create a secured asset called as bills receivable. And on 1st of March, we are cancelling the bill worth 5 lakh because we're receiving the money. How much money we're receiving? 4,95,000 only. Why? Because from that 5,000, we are giving a rebate allowed or we are giving a discount allowed. So 5 lakh into 12% into 1 by 12. If you do, you'll get 5,000 rupees as rebate allowed. So this is rebate on bills account allowed. So it is expenses for us. So debit all expense and losses. So balance 495 we are receiving. Any problem here? Online people, any problem here?
No, sir.
Very good. The same thing comes in books of Bhavika. So Bhavika, for Bhavika, it is a credit purchase. So purchase account debit to unsecured creditor. Unsecured creditor. Then I reverse the unsecured creditor and create a secured liability for 5 lakh, 5 lakh, 5 lakh. Then on March 1, this is the premature date of payment. On that date, I'm closing the liability of 5 lakh because I'm making the payment. How much money I'm making the payment? 4,95,000 rupees. What happened to the balance 5,000? We are getting a rebate allowed. We're getting a rebate received. So basically, we're receiving that money as a discount. This is discount received or rebate received. 5,000. So rebate received or discount received is a credit all incomes and gain item. So it is nominal account. So credit all incomes and gains. Any difficulties here, please? Yes, you can write rebate received account also. No problem. Rebate income, rebate received, anything is allowed. Discount allowed. Sorry, discount received also can be right. Discount allowed is expense. Discount received is income.
Rebate account.
Sorry?
Rebate account.
Rebate will become generalized because if you can specify what kind of a rebate are you getting or giving. Though by putting in credit, it means that you're giving. But to be on safer side, if you write rebate received or rebate income, you'll be a little bit safe. So guys, can we take a quick break of 6 minutes and start at 12:40 p.m. sharp? Right? Let's take a break of 6 minutes. Yes, people, welcome back from the break. So let's continue with the fourth question of your ICS study material. It says that journalize the following transactions in Katrak's book. Now the first question is Katrak's acceptance to Basu for 2,500 discharged by a cash payment of rupees 1,000 and a new bill for the balance plus 50 rupees for interest. Now the level is getting heated up. So this is basically a question of renewal of bill. So they want to record the entry upon the renewal. So the steps what we followed, guys, one by one, you can write those steps also. For example, for renewal, what is the entry? First entry is for the cancellation of original bill. So you recreate the debtor and cancel the old bill. And then what do? You record the interest due entry. Interest due entry. Debtor to interest due. So total how much money you are supposed to receive from the person, you get to know. Out of this, the question will tell you that this fellow has made a part payment. So to that extent, you'll reverse the debtor. To that extent, you'll reverse the debtor and you'll receive the money. And for the balance, you'll reverse the debtor and recreate a bill. This is the procedure. So you can do all this entry individually also, or you can combine and do it. So in your textbook, they've combined and done it. Whatever you're comfortable with, you can do. They're asking Katrak's acceptance to Basu. Katrak's acceptance to Basu. My question is, who has drawn bill on whom? Basu has drawn bill on Katrak. So Basu is the seller and Katrak is buyer. So we are recording the entry in the book of buyer. Clear? The perspective has to be clear. So which means seller is also called as creditor and Katrak is a debtor. So from Katrak point of view, Basu is a creditor. To him, we have to make the payment. So now, guys, the first entry is the cancellation of the original bill. The original bill needs to be cancelled. So what will be the entry? Bills payable account debit 2,500. And I need to recreate Basu. How much? 2,500. This is the first entry. Your cancellation of original bill. Then you record the interest. What is the interest due? Interest expense account debit to Basu. What is the interest? 50 rupees they have given themselves, correct? They've given that interest is 50. So 50 debit, 50 credit. So this means that this much Basu have to give me for the bill and this much Basu have to give me for interest. So total 2,550 has to give, out of which he is made 1,000 rupees cash payment. He has made 1,000 rupees cash payment, and for the balance, he wants a new bill, and for the interest also bill, which means total 2,550. In that 1,000 rupees is paying cash. So balance 1,550, you have to draw a new bill. So now third entry, this both I can combine. Okay, how? Basu, both are credit. I'll cancel credit by giving a debit. So Basu account debit. How much? 2,550. How am I cancelling Basu? First of all, by giving the payment in form of cash 1,000 rupees, and for balance 1,550, we are going to create a new bill, second bill, and you're done. And you're done. Now let's see what your textbook has done. They've done all the compound entry. If you look at it, they've done single entry. All the three entries have been combined. Listen to me very carefully. Bills payable account debit 2,500. This is there. Now please guys, if I combine all the three entry, what will happen? Basu in credit 2,500 plus Basu in credit 50 is cancelled again. Basu debit 2,550. Right or wrong? Right or wrong? Then what am I left with? I'm left with bills payable account debit 2,500. Bills payable account debit 2,500. Interest expense account debit 50. Interest expense account debit 50. Then I'm left with 2 cash 1,000. 2 cash 1,000. And then I'm left with new bill 1,550. New bill 1,550. Now imagine if I had not taught you the basic entry. Will you be able to do this compound entry? Now you're able to follow? So this is the combined entry of those three, which I just taught you or put it on the whiteboard. So if you're comfortable, you can do this. If you're not, if you're super comfortable, if you can do this, well and good, you will save time. But if you feel that I may get confused, let's not do it. I would suggest you to do this in exam. It'll take some extra time, but you'll not go wrong. This, if you follow now, everywhere you're following things uniformly. So if you see in the previous question, they have done the full entry like this. And in this question, they have done the compound entry. Why did this compound entry? Is because, see, this particular question has got 4 subdivisions. And this will, let's suppose, come for, maximum 8 marks, 2 marks each. So for a 2 mark, if you do 3 entries, it will take a lot of time. So for that purpose, they're doing compound entry. So by practice, if you're able to develop that compound entry skill, well and good. Or else you can pass a independent entry and come in exam, nothing wrong. If this is clear, I'll go forward, guys. If this is clear, I'll go forward. Abhi, Kavi, Kavya, are you clear, ma?
Yes, sir. Sir.
Sanjay, Yash, comfortable?
Yes, sir. Comfortable, sir.
Wonderful. Now let's do the next question. G. Gupta, that is Gupta acceptance for 4,000, which was endorsed by Kartak to M. So first line we have to understand Gupta's acceptance for 4,000, which was endorsed by Kartak. So who's the drawer of the bill? Who is the drawee of the bill? G's acceptance. Who accepts? Customer accepts. So can I say this fellow is customer? So Kartak would have issued the bill to Gupta. Gupta would have accepted it. And then he endorsed it to M. So K, G, M. M is the endorser. Now, do you recollect the format, the drawing? In exam, you should have this format in mind. That's why I've given this format to you, so that you will easily remember. So Kartak has drawn bill on G. G has accepted and given back. And then K has endorsed this to M. Clear with this point? Now, Mehta was dishonored, which means what? When Mehta gave the bill to G, it got dishonored. Mehta paid 20 as noting charges. Bill withdrawn against check. This is the tricky point. Rupesh, remember you asked me this? Okay, now let's do it, guys. Let's do it. Now, what entry are they wanting us to do? Which entry they are supposed to do? Are we supposed to do the first entry of bill? Not required. Are we supposed to do the acceptance entry? No. Are we supposed to do the endorsement entry? No. Because they very clearly told that the endorsement has happened and dishonored. So we are at which stage? We are at the fourth stage. We are at the dishonored stage. The first stage over, second stage over, third stage over. Can I do the fourth stage, or do you want me to do all the stages and then do the fourth stage? Direct fourth stage? Okay. In the fourth stage, what happens? M is going to G. G is saying, get lost. M is coming crying to whom? K. So K has to record now. K will record the entry for dishonorment. What will be the entry, guys?
Gupta account to Mehta.
So Kartak was supposed to receive money from G. He did not receive. G account is already closed because of bills of exchange. So we have to recreate G. So G's account will be recreated. From Kartak point of view, I have to remember to collect money from G. So G's account debit. We'll wait for the amount. 1 second. And when the bill is dishonored, the amount what we paid to M in form of bills of exchange, that was not fruitful. That did not happen. So now Kartak will come and ask, give me the money. So we have to recreate Kartak. So we have to recreate M's account. M will come and ask money to K. So K will recreate the liability. So to M's account. Now M will ask how much money? M will ask, apart from this 4,000 rupees, he will ask 20 rupees noting charges also. Because M has paid 20 rupees to the notary public, which he will recover from Kartak. And Kartak in return will recover from Gupta. So totally 4,020 rupees we have to recover. 4020, 4020. Is this clear or not clear? So this is basically recreation of debtor, which was earlier closed. Why we are recreating? Because we are ready to receive the money. I need to remember to receive the money in future. And why are we recreating the creditor? Because the creditor which we closed, thinking that Gupta will make the payment to M on the due date, that did not happen. So Kartak did not receive any money. Therefore, the recreation of creditor needs to happen. Creditor needs to be recreated. This is till this point. The last point is a twister, which says that bill withdrawn against check. Bill withdrawn against check. What is the meaning of this? Bill withdrawn against check, which means what? When M gave the bill to K. So K has taken the bill from M. Taking of bill from M is called as withdrawal of the bill against check, which means we have given the check to M. So M, when he gave the bill to K, on the spot, he had taken a check and only then left the place. Without leaving the check, he did not go. So bill withdrawn against check. Who has withdrawn the bill? M has withdrawn the bill, or K has taken the bill from M by giving check. So which means what? Payment gone to whom? M. So I need to reverse Mehta. So M's account debit, because I made the payment 4020 by giving a check in form of bank 4020. So creditor settlement over. Creditor settlement over. This is recreation of debtor. This is recreation of creditor. And because of the last line, Mehta has been settled by giving a check of 4020. Payment to Mehta through check upon withdrawal of the bill earlier received from Gupta. Clear with this point? The last line is a twister. Please mark this line. Take a highlighter and highlight this point like the way I have highlighted. Second point is very, very important. Abhi, Kavi, Kavya, Sanjay, Yash. Clear, not clear?
Clear, sir.
Yes, sir.
Yes, sir.
Very good. Next question. Third question is, Dalal retires a bill for 2000. Dalal retires a bill for 2000 drawn on him by Kartak for 10 rupees discount. Drawn on him by Kartak. Drawn by Kartak. So who's the drawer of the bill? Kartak is seller. Dalal is customer, buyer. So what is he doing? He's retiring the bill. Retirement of bill means what? Making the premature payment. So we want the entry for the premature payment. So from Kartak's point of view, Kartak is receiving the money or giving the money? Kartak is receiving the money. Is he allowing rebate or is he receiving rebate? Kartak is allowing rebate. So from Kartak's point of view, on the premature payment date, we are receiving the money, bank account debit, and we are allowing a rebate. So rebate allowed account debit 2. Rebate allowed account debit 2. We have to close the liability, no? From our point of view, from Kartak's point of view, Dalal is a creditor. So we need to close his books of accounts. So Dalal account will be credited or bill account will be credited? Bill, because this has been settled against bill, which means bill is still alive. So I'll not put credit Dalal, I'll credit bills payable. Clear with this point? And bills receivable. Yeah, bills receivable. The first entry is what? Dalal account debit to sales. Then when bill was executed, you close the Dalal account by creating a credit and bills receivable was created. So Dalal account is already closed, boss. Bills receivable account is alive. So that I am closing it. What is the value? 2000 rupees and the discount is 10 rupees. So 2000 rupees is the bill value. 10 rupees is the rebate allowed. So 1990 is the amount received. Okay, not okay. Online people, okay, not okay.
Okay, sir.
Okay.
Fourth one. What happened? Doubt? Next question. Oh, wait, I'm coming. Fourth one, I'm coming. Kartak's acceptance to Patel. Kartak's acceptance to Patel. So who's customer, who's seller? Kartak is customer. Patel is seller. So Kartak is given the acceptance. So Kartak is the payer. Kartak acceptance to Patel for 5,000 discharged by Patel. Modi's acceptance to Kartak for a similar amount. Kartak's acceptance to Patel for 5,000 discharged by Patel. So Kartak Patel is clear. Who is Modi's acceptance to Kartak? Modi's acceptance to Kartak for a similar amount. So Kartak is the customer. So I'll put the customer here. And Patel is the seller. Modi's acceptance to Kartak. Modi is giving the acceptance to Kartak. Then who is Modi? Modi's acceptance to Kartak for a similar amount. For a similar amount. Now, what is the line trying to signify? Tell me. What is the meaning of this line first? Discharged by Patel. This one. And second thing, what is this? Okay, so Arjun says that this 5,000 is paid. How do you derive that answer? Online people are waiting for participation. Now this is the real question. This is something you get in the exam. What will you do? Think, scratch your mind. If I keep on telling everything, then what is the point? When will you think? Kartak's acceptance to Patel for 5,000 discharged by Patel. Who's Patel? So Patel has sold goods to Kartak. Patel has sold the goods to Kartak. Kartak has given the acceptance. So who should make payment to whom? Kartak should make payment to Patel. Kartak acceptance to Patel 5,000 discharged by Patel. Discharged by Patel. It means Patel is giving the payment. Discharged by Patel. Now next point is Modi's acceptance to Kartak. Who is Modi? Let me do it here. Patel, Kartak. Patel is giving goods, selling goods to Kartak. Kartak is giving acceptance of a bill of exchange. Till this is clear. Now the confusion is discharge by Patel means what? First point. Second point is Modi's acceptance to Kartak. Modi is giving acceptance to Kartak, which means Kartak would have sold goods. Kartak would have sold goods to Modi, and Modi in return has given acceptance of bill of exchange. So Modi's acceptance to Kartak for a similar amount. Modi's acceptance for a similar amount, which means in both the cases, the amount involved is 5,000. So here also the bill value is 5,000. Here also the bill value is 5,000. So Kartak has to pay. Kartak has to pay to P, and Kartak has to receive from M. Kartak has to pay to P, and Kartak has to receive from M. So Kartak will receive from M, then give it to P. Instead, if P and M directly settles. Question clear or not clear?
Yes, sir.
See, Kartak has to first receive from M. Only if he receives from M, he'll be in position. So he'll get the money. Only then he'll be in position to pay P. So what if directly M makes payment to P? Because both are 5,000. No? So Kartak will say directly give money to P. So from Kartak's point of view, M is the debtor. From Kartak's point of view, P is the creditor. To cancel the creditor, I need to give a debit. To cancel this debtor, I need to give a credit. So M credit, P debit. Let's see if that is answer. Now here, M and P will not come into picture because it is being executed against bills payable, bills receivable. So now P should be debited. From case point of view, the amount that I'm supposed to give to P, can I say it is bills payable? K would have issued a bill. So bills payable is currently a credit balance. To cancel this credit balance, I need to give a debit. So bills payable account debit 5,000. Then from Kartak point of view, M is a debtor from whom we have to receive. It is a bills receivable. M is replaced by the word bills receivable. Therefore, I need to cancel the debit by giving a credit. So bills receivable. Appadina, in Kartak books of account, first entry was what? For example, from M's point of view, I did a sale to M. So M's account debit to sale 5,000. Then debtor was cancelled against bills receivable. So bills receivable account debit to M. So what happened? M gone. Here also M gone. So what is open here? Bills receivable is open in debit. If I talk about, this is K versus M. We are recording in K's book. Now K versus P. We are recording in K's book. So here K is purchasing from P. So what is the entry for purchase? Purchase account debit to P 5,000. Second entry is what? I'm cancelling this P by giving a debit and creating a bills payable 5,000. So what has happened here? P gone, P gone. So what am I left with? Bills payable. So this bills payable is getting knocked off against bills receivable because the amount is same. The amount is same. So what will I do? I need to receive this 5,000. That is, Kartak needs to receive this 5,000 and pay 5,000. So instead of receiving money from M, then again going and giving it to P. So we're directly telling that you party meet each other and give the payment. So M is giving the payment directly to P. M is giving the payment directly to P. M is giving the payment directly to P. So which means bills payable also over, bills receivable also over. Correct? No? Here bills receivable means I need to receive the amount. Here bills payable means I need to pay the amount. So M is giving money to P. M giving money to P is as good as I received the money and I gave it to P. I repeat one more time. M is giving the money directly to P. It is as good as M is giving money to Kartak and Kartak is giving it to P. Are you able to follow? So, in which case both money is also received, money is also paid. So, in that case, I'll knock off the bills receivable against the bills payable. To cancel the bills receivable which is currently in debit, I need to give a credit. So, two bills receivable, I need to give a credit, which means what? Money received. This money is received against the bills payable. So, two bills payable currently in credit. To cancel this bills payable, I need to give a debit. So, bills payable account debit. Slightly tricky, but interesting. Tell me, guys, online people, any doubts here? Any doubts, please?
No, sir.
It is a kind of endorsement only. It is a kind of endorsement only. Don't complicate. This is always people are finding it a little difficult. It's as good as endorsement. Love triangle. Same thing. But it is ulta. This is ulta. If it is not understood, then I'll explain this way. Understood, not understood. Guys, I'm not getting any answer from the girls online. Hello.
Yes, sir.
Kavi, Abhi, Kavya, clear?
Yes, sir.
Abhi, I'm not getting any response. Abhi, are you there? Kavya, you there?
Yes, sir.
Puri da ka naam? Kile puri liya.
Puridu, sir.
Sure.
Yes, sir.
Okay. Now, guys, we're done with this. Mark this entire fourth question as very complicated. You have to practice this 2-3 times. Here, the problem is not with the solution. The problem is with the understanding of the question. You want to close? Yeah. Can you do one question and then wind up today's session? Fifth one, guys. We'll wind up the session with this today. On 1st Jan 2020, Vilas draw a bill of exchange for 10,000. Vilas draw a bill of 10,000 due for payment after 3 months on Ekant. So Vilas is a drawer of the bill. Ekant is the acceptor of the bill. The bill value is 10,000 and the term period is 3 months. The term period is 3 months. Ekant accepts to this bill of exchange. On 4th March 2020, Ekant retired the bill of exchange at a discount of 12% per annum. You are asked to show the journal entries in the books of Ekant. Very simple. Please do it. Please do it. Let's see if you're able to do it or not. Easy question. You have to record the entries in books of Ekant. Ekant is the acceptor. This is the customer. From customer's point of view, you need to record it. Is Ekant or Eknath? It is Eknath, not Ekant. It is Eknath. Vilas and Eknath. Done, people? Okay. So from Ekant's point of view, this is a purchase transaction. So what will be the entry? Purchase account debit to Vilas. Right? Then this Vilas creditor is cancelled against bills payable. 10,000, 10,000. So we don't have to go till date of maturity, but we need to know the date of maturity because the difference between the payment date and the date of maturity is the interest calculation period. So please tell me, what is the due date?
4th April.
4th April is the due date. And the payment is happening on 4th March. So can I say 1 month earlier the payment is happening? So for 1 month, you need to calculate a rebate. So next, on 4th March, the next entry will be I'll cancel the bills payable worth 10,000 by making a payment. How much money I'm making the payment? From 10,000 rupees, 100 rupees is the interest. So balance 9,900 only I'm paying. And 100 rupees is interest earned, interest received, or discount received. So create all incomes and gains. So this is income. Any problem? Jujjubi question. Online people, any problem?
No, sir.
No, sir.
Wonderful. So sixth question, guys, if you see, it is the same question, no change, only the year change if I'm not wrong. Or that also no change, as it is same question come twice. Ignore it. Oh, in the books of, it is Vilas. Okay. It is in books of Vilas. So for Vilas, it is a sale transaction. So what will be the entry? This is next question, guys. Next question. Same question, but it is asked in books of Vilas, the opposite party. So Eknath account debit to sales 10,000, 10,000. Then what happens? I need to reverse the debtor, and in place of that, a secured debtor is to be created. 10,000, 10,000. On the payment date, we have to cancel this bills receivable worth 10,000 because we are receiving the money. How much? 9,900. What happened to balance 100? It is a discount allowed or the interest allowed. Just the opposite entry. Any problem here? Any problem here? Online people, I'm waiting for responses.
No, sir.
No, sir.
I think 7th and 8th, 2 more questions are pending. This is also a little bit new. This is not covered in your syllabus. So 7th and 8th will be interesting. And from the next question onwards, it will be accommodation of bill. So please be ready for the roller coaster ride. Accommodation of bill, guys, you will understand only if you're strong with the basics that I've discussed so far, because it is going to get at next level. It is going to be level 3 question. So you are at the present level 1. 7 and 8 question is level 2. Accommodation is level 3. So if you are ready with level 1, only then level 2 and level 3 will be understood. So next class, guys, please come prepared. Please come revised all the questions that you've done so that we can do it a little bit fast. Right? So online students, any doubts so far?
No, sir.
No, sir.
Comfortable?
Yes, sir.
Okay. Offline people comfortable? Okay. So yes, people, that's all from my end for today's session. I'll see you all in the next class, that is tomorrow evening, 5 to 6:30. Until then, bye-bye. See you. Take care.
Thank you.